So thank you. Yes.
You're welcome. You're welcome. So then we got 22 people in here. I'm gonna give them about 2 more minutes, and then we'll get started. Let me see.
Yeah, what you said just really quickly about the market being patient, that's key. I know that we're taught that patience, discipline, all of that self control is key, but it seems as though with everyone giving back profits, the market is being just a little bit more patient than we are. What are some of your suggestions just in the here and now before you get into the meat of what you're going to present to us today? What we should be looking out for in order to, kind of beat the market as it relates to patience.
So the notion of less is better is actually true, especially if you're dealing with business, even if you're dealing with relationships. The less we do and then focusing on quality instead of quantity is a very important thing. So that means you have to fight the greed monster. You have to fight the notion that I need to be doing more. A lot of times we really don't need to be doing more. We need to be doing less and then making what's less more quality based. And so um, fighting that temptation of over trading, over leveraging, it's really going to take a lot of experience of you actually feeling an emotion and pain point that those events cause. So I've over time I'm starting to develop plans that where I'm restricting myself where hey I can only take 5 trades or 6 trades for the week, and typically that really comes down to 1 trade per day, and I have one in the chamber that I get like a extra life so to speak. And what I've noticed over time is that the less I've traded, the more higher quality trades I was taking. It's because you have to play it like a game. So think of yourself. If you told yourself you only got 6 trades to make this week, you're not going to be sloppy then. Because typically, if you give yourself an unlimited amount of trades, the quality goes out of the window. You're going to start taking setups that you know you probably shouldn't. You're going to start chasing trades because you feel like I'm missing something. When in reality, it's like, no, the market is here. You just be patient about it and you take your setups correctly, right? So if you know you only got 6, you're gonna look at the market totally different, and you're gonna what you're gonna do is process elimination, meaning that you're gonna eliminate all the noise. You're gonna eliminate everything that just goes against your particular trade setups and patterns or whatever you're looking at. So it's no different than imagine you're going out into the dating pool and you already know that if you tell yourself, I'm only looking for one, that's it. Now, if you go out here and say, I'm just going to talk to everybody, it's going to be a little different. You're going to take on a lot of disappointment. It's going to be a whole lot of things. You can't focus. That's what I'm trying to say. Because you got too much you're trying to juggle instead of honing in, because you could already, and most of us on the call, we got standards, right? We got standards that we want to set to be able to find a particular partner that we're looking for, and you can go ahead and eliminate a certain batch of men or women, based off your criteria. So it's a process of elimination. So it's the same for me. What I've done in forex trading, I think Larry, he got on the SPX. That's what he mainly focuses on. But in our earlier days, I was trying to trade everything. I was trading penny stocks, trading forex, trying to do futures, trying to do options, crypto. You just all over the place with trading. And I was like, it's better to just try to focus on one. Maybe 2 or 3 instruments at the same time. But for the main part, I just try to focus on one and get to know it intimately, understand it, understand, when the market, the economy is going this way, this is how it acts. So you get to know it much better versus a person who is trying to date 15 people. Like you don't get to know them, So that's one of the things to me is focus, narrow it down, find your edge. And there's so many instruments out there that people can focus on. that other people may not, and but it best suited for you, you know. And
Yeah,
so,
yeah, very well said.
mhm,
Um, and then that brings you to your highest probability trade. You weeded out all of the low quality men, if you will,
right,
and you weeded out all of the low probability trades, getting to your highest probability trade. You spoke something just a moment ago that really kind of stuck out to me, and I don't know if anybody else caught this, but getting to the highest point of pain, and that's that failing back to back to back until you finally get to that point of okay, this is my edge, I found it. Let's go on this one. Let's hone in on this particular trade setup. This is the one. I'm going to stick with this one. About how long do you think, and I know you have so much more to say, but about how long did it take for you to get there?
it's a great question. So, probably roughly at 5 years. It took, but so granted, um, we don't want that for everybody else to take 5 years. I don't want anybody on here thinking like, "Dang, I got 4 more years to go." But it's one of those things where it just that's just how long it took me without the knowledge I have today. So of course, somebody would have came along and really sat me down to see it. I think we could have reduced it. But the key thing is people got to have time in the market. When you have time in the market, time in the market means that you're gaining experience. You're feeling the wins, the losses, the emotions uh, that go along with it. And so with that, um, seeing like just so my trading strategies, whereas my investment strategies mainly changed drastically because of what happened in the crypto market of 2018. Massively seeing your account just like ridiculously high, and you're just thinking it's just going to keep going forever and ever. And that was really the retail mindset, which they call dumb money, and seeing all those gains just get wiped out. And I knew then, I was like, wait a minute, I gotta develop a better strategy than this. This is not gonna work. So that and then that really wasn't a pain. So I would get to the pain. That's more so of a slight frustration. So because here's the thing, many of us financially aren't strapped. We may have a good job, or you may have some good income, and have a nice little savings, you got a nice little cushion. And so for me in the earlier days, like I had all that, right? So me seeing hundreds of thousands, six figures, then come back low, it wasn't really a pain because I wasn't financially strapped, right? So it's like okay, whatever, it's just extra money. I don't care, right? But when I look back in hindsight and I was developing my strategies, I was like, well, I could have managed this a lot better, could have did this and that. So I started implementing various strategies to help mitigate some of those wild swings, understanding proper position sizing and building a portfolio such and such, right? But my real pain came when I started trading and feeling the frustration, feeling the anger through self sabotage, seeing you're doing very well, and then you go through a series of trades that you're just either you're revenge trading, you're not being patient, being impatient. I got to make this trade back, and it just spirals out of control, and then before you know it, we we blew our account. You wiped out. Yeah. You wiped out. Right. And then you do it again, blow it again. Then you tell yourself, not gonna do it this time. I'm not going. I'm gonna do this, and then you find yourself doing it. And then we remedied. Me, Larry, and Marquise. We got together. We said, well, let's do a joint account. Let's do a joint forex account. Now we can all hold each other accountable. We still blew that one because we we didn't have rules strict, and then the thing was we all had three different trading styles. So Keys was more of trend line. Me, I was more Fibonacci. Larry's more structure. So you got three people trading account, and in this account, everybody on their phone. You can take the trades if you want. The capital was there, was doing it. Yeah, of course, we had great. We would build it up real good, and then all of a sudden we get sloppy. And so we all decided to go and learn about self sabotage. We all was like, something's wrong. So it makes sense. We're too smart for this. Smartest traders in the world, for some reason, can still go on a downward spiral, and wind up, like we said earlier before people got on, is about how the markets know that eventually you're going to give back whatever you gain, and it could be patient. So that's another strategy that we also implemented, is that we extract wealth from the market. I mean, it comes back to my bank. I'm not playing. Like, I have a threshold you want to keep in your trading account, but people get in love with seeing the numbers of their account grow instead of their bank account, which means it's back home, it's back there. That's a little different. You can have a
Yeah.
six-figure trading account. That's not really what we call realized. Yeah, we're gonna say that's not really truly real. Even though you can sell, you can take profit in your account, and you can tell yourself that's realized. Well, the problem is it's still not realized. You know why? It's because it's still at risk. Why is it still at risk? It's because you can reinvest that. You can trade that, and whatever was supposedly a realized gain, you just damn threw it all away. Something
Right.
happened. You gave it away. So what is one of the ways that you can say, hey, if I let's say you made $5,000 in the market for the month, you may say, hey, I have a rule. I pull out 70%, and you keep 30% in. So what does the 30% do? The 30% is used to continue to compound, but at least you got 70% is coming back to your bank. Now that's off the table. Now that's what we call risk free. Now that is called a realized gain. All right. So we could to me we could play with that. So it started doing that more. Um, and this is really my first year where I'm heavily trading. I'm more of an investor. So I looked at the economic climate, see what was happening, and I felt like this was a great opportunity to show my skills, because this is where legends are made. Because we've been in a bull market for almost 14, 15 years, breaking all time highs. A lot of educational courses are coming out. A lot of people are great, but are we really going to see now what those educators are really truly about? Is because they just happen to inherit, a great bull market. I mean, everybody made money, but now we're in the market conditions where things is like a little, oof, it's a little all over the place. It's like, so now the real skill sets is going to be made. The real emotions are going to be stretched, exposed.
Mm.
You're going to really, and I felt like this is a great time to also be transparent. So that's why I said earlier this week, I took over 40 something trades. I typically won't do that, but I'm just doing that to be transparent, see, so people can see what I'm doing, why I do it, and what I'm thinking about. Um, and then that'll help them gauge, because I think at this time when markets are down like this, people get a little too secretive, and they just, it's easy to show your wins, but you also need to show some of the losses as well too.
Yes. Thank you for your transparency on that. And I loved hearing your story about how you kind of got over that hump, um, the full financial, pulling the 70% out, investing 30% back. You said you just started doing that,
Right.
or was that
Yeah.
okay?
For
So that was
trading. Yeah. For
recent, and
Mhm.
that's allowed you to keep a lot of the profits.
Right. Because you hear stories of us, a couple people in the group. Man, I did good for 2 weeks, and then I just gave it all back this week. You know,
Yep,
I get it. I know it
absolutely.
happened. You look. We're in a game of probabilities. You know, I have to. I keep forgetting this guy's name. There's a guy in the '80s who traded forex, and he made over $400 million, I believe. And but he lost 90% of his trades.
Mm.
He only had a 10% win rate. He was very impatient with his losses. He understood the probability game, and so he had an impeccable risk to reward ratio. So basically, it could be something that's 1 to 20. So taking those short losses and little micro losses, I used to do an exercise and show people if you win 90, I mean, if you had, if you lost 90% of your trades, well, first I used the winning. Let's say you won 90% of your trades and you had 10%
Mhm.
loss. I could show you that the night if you won 90% and your risk reward wasn't correct, that 10% can wipe your whole account out. That's how
Yeah.
important risk reward ratio is. You can win, and that I was that person. I had over 53 winning trades in a row. I tell this story all the time. Trading a US dollar, Canadian dollar. It was back in 2018ish, 19ish, one of them. After
Mhm.
crypto got towed up, so I said, "Well, let me learn forex. So let me get in and do this." Got it. I did good. Just tearing it up, growing my account. I thought I was invincible. It took 2 trades. I wiped out every game. Every two
Mm.
trades wiped out all of those 53 wins in a row. So
The market was patient. How did the market get you?
greed and um, not. So look, when you go on a winning streak like that, you get an ego. I don't want to lose. I don't want to see no red in my
Right.
account. Like, no, I
Right.
refuse to lose. I can't lose. And then you was like, I'm gonna ride this drawdown. I'm gonna add, and I'm gonna make up for it. Okay, yeah, I'm down 3,000. Okay, watch this. I'm gonna add me a couple standards. I'm gonna get out of this, and then the market keep going. And then you say, you know what? Let me just jump on the trend because obviously I got it wrong. And then what do? You get in the trend, and the thing turns around, and then goes into the direction that you was already in, but now you done jumped on the other side. So now it's just frustrating thing. And before you know it, what happens? You say this: I'm already down this much. I may as well just ride it out. What's the worst? So you're willing to blow your account at that point because you got to ask yourself, how can you blow your account? If you really think about it, how do people blow their accounts? What what possesses us to say I'm no longer going to have safety? I don't care. That's self sabotage. Just something inside
Yeah.
of us that's taking over an autopilot program, saying, "Hey, hey, we rationalize. Well, shoot, I don't because here's the pain. The pain is in
Mhm.
this. The
Mhm.
pain is in the realization of what we do is by avoiding pain, we create pain. See, that's the game. See, we cut if we're in profit and it pulls back a little bit, we rationalize. I'm going to secure profit. And what's the story we say? No one ever went broke taking profits. That's the story we tell ourselves. If we hear it all the time, nobody ever went broke taking profits. Yes, you do. You taking profits early is just as bad as you just letting your a stop, not even setting a stop loss, because you're not allowing your plan to play out, and you're cutting yourself short. But what you're doing is you're trying to avoid pain
Right.
because you do not want to see the trade to turn against you because it happens. What happens? We get in a trade, we're up, and we'll go out, come back, check our phone, and it's in the red. As soon as we open, we're like, ah! And what do you say? I should have took profit. So next
Right.
time, I'm not gonna allow this to happen to me again. I'm just gonna take profit. And then what happens? It goes and hits your targets, and you're like, dang. Then when another time happens, and then you let it ride, and what happens? It doesn't. It turns around and it comes out, hits your stop loss. So then you start to rationalize. It's just better for me to just go ahead and take the profit. So in that scenario, what do we do? Well, typically for me is I move my stop loss into profit. So that, but
Right.
because at that point I'm just following a plan, meaning that if it goes wrong, if my targets aren't hit, if it comes back to a certain level, I still walk away with a win-win. But I follow a plan and not an emotion or reaction. So
Right.
sometimes it's more reactory with that. Um, but
Let me ask you
mainly,
a question,
mhm,
if you don't mind. For me, that scenario happens, and the exact situation that you named, it almost seems like now that I'm hearing you say it, my thought process is this is what happened last time. How can I avoid this?
Right.
And it now sounds like I'm not treating each and every trade like it's a brand new trade. And
Right.
that almost just clicked the moment that you said it.
When you take a trade, you should automatically say to yourself, or not say to yourself, but you should already be thinking that it's going to lose. I'm going to lose. You have to take your trades as if you already lost. This is because you can now account for what is at stake. So you remember when I was going back, I was saying, how can you allow your account to be blown? How can somebody have 10 grand, $1,000? How can you take one or two or three trades and you allow it to just get ate up like that? Like, how does that
Yeah.
happen, right? So guess what? Imagine me got $1,000 account. I go in and I take a trade and I just say, I'm just gonna play around with it, just see what it do. And I told myself, I'm gonna lose $1,000. Do you? I don't. I can't take that trade. If I say to tell myself I'm gonna lose $1,000, what's the purpose of taking this trade? So what happens? You have to then say, what are you really truly willing to lose on this? And I may say, at max, man, I only want to lose $50. So guess what? Your stop loss is set at the $50 limit. You've
At
already
fifty
counted it.
dollars.
So if I can look at if I can feel decent to say, all right, yeah, I risk $50 to make 300. So 1 6 to 1, I can do that. Yeah, let me take this trade. So when I trade forex a lot, when I take a certain size position, if I go to the standard, I have to say to myself, "Am I willing to lose $300 to make this 5,000?" And if I look at my account and my account don't justify it, I might say I need to adjust my position size. I can't do a standard, so maybe I need to go down to $2 lot size or $1 lot size. So what we're doing is we're always playing from a position of defense, of protection. We want to protect. There's no way we could go in. It's like, wait, whoa, whoa, whoa. So, like I said, if everyone who's ever blown their account, if we really would have sat down and said, hey, man, do you know today is going to be your last day trading this because this is going to blow your account? You want to do it? You probably say no, nah. But what if we said, hey, today, if you take this trade, things not going to play out like you think. So you need to set a stop loss. How much you want to lose today? Well, with retail traders, we approach the market on how much we can make today. That's the mistake. How much I can make. Hey, if you get in this price, you can make this. We measure the pips, the ticks, whatever market you in. What happens? Oh, I can make $3,000 on this trade. Yeah. For you to make 3,000, what's the sacrifice for that? You can, what if it don't go your way? What's the sacrifice for that? So people, if you do a 1 to 1, are you telling me you're gonna risk potentially making 3,000 to lose 3,000? It's not a real good one, right? Well,
No,
let's
not
find
at
a
all.
yeah, let's find a good one. Maybe losing 300 to make 3,000. That's a lot better. And then you have to ask yourself, how many of these losses can I take in a row to be able to still be profitable? So we got Juju. She only takes a trade if it's the risk is one to 12 or 12 to 1. All right. So for every $1 she risks, she can make 12. She only takes those high probability setups. So what that does is that requires a lot of patience. Now, with her flaw in her strategy was this: she always lets it play out. She doesn't move her stop losses or anything. She has come numerous times one tick away from taking profit, and it comes all the way back and wipes her out, and her stop losses hit. So we were like, "Whoa! Like where? Like why that? If we know your plan is strict, we get it. It's your plan. But inside our plans too, we could still have some form of sabotage. That hey, the markets are dynamic. We can adjust. We can have room of flexibility. Why not move it
Right.
into? Why not move your stop loss into profit? Like Does it make sense to say that, hey, I'm going to lose 300 when if your targets say that you're going to make 1,500 on a trade, but if you move your stop loss in profit, the worst case scenario, and it's a win-win situation, market comes back and you get hit and you want to make $300. Well, that's better than just saying no. If it hits, it hits. I don't do it. So what that does is we restrict ourselves. We put strict rules in place, but those rules over time begin to help us and aid us in our self sabotage, and we don't even realize it. Yes, we need to have rules, but we also need to have intuitive. We need to be intuitive. So there's two things. So there's two types of ways. All traders need to start out with mechanical. They need to be mechanical. Means that, hey, if A does this, then I do this. A, B, C, D. That's what it is. If you do this, I do this. If you do that, I get out. Da da da. That's mechanical. The intuitive, you gotta have time in the market. You gotta get to know. You gotta get a feel for things like that. That cannot be taught. That is just a skill set you get, and you become one with what you're doing, and you get intuitive to where you can say, hey, you know what, I can increase a little bit of risk here. I can take this off here. All right, I see how this is forming up. I see this pattern here. 90% of the time, this pattern plays out here. So you know what? Let me protect myself on this side and do this. And then sometimes, if I'm in doubt, stay out. If I'm going back and forth, I'm like, dang, this looked like an inverted head and shoulders, but also if I look to the left, this pattern showed up before and it failed. It didn't follow through. So I'm like, you know what? Forget it. I'm not gonna take it because I'm in conflict. So when in doubt, stay out. So that's intuitive. That's intuitive. Like I really can't, you really can't teach that, but that's just something that comes over time. You get what I'm saying?
I do. I do. Gotta have the flexibility, and you definitely have to have, you know, an option A and an option B with what will happen within your particular trade setup. So the flexibility is key. Be willing to change, at any given time,
Mm-hmm.
just in case, it doesn't go in the direction that you thought. But then with having that high probability trade, if it does actually indeed go against you, then can't really get upset because that was the trade that had pretty much counted on. And you journaled it over time. You had time with it in the market. Everything that you said. I really hope you all are leaning in. A lot of gems are being dropped. Thank you. Thank you. Thank you.
I appreciate that. So yeah, and like I said, today, we wanted to go over the KOT report, which is mean commitments
Okay.
of trades, and this is
Yep.
where your big institutions and stuff they have their positions, or at least it gives a snapshot of where a lot of the traders in the market is giving a sentiment on how they feel. So sentiment is a little different. Well, commitments to trade, they're actually those trades are actually committed. So it's a little different. So it gives us a
Okay.
snapshot. And so right now I'm looking at a WTI financial crude oil. And let me see if I can annotate on the chart. And I want to show you, let's see what color I got. I got yellow, it's red. Let's look at June right here. I guess we can go to the 14th. All right. So June 7th, 2022,
Mhm.
we had 71,000 long positions and only 29,706 for shorts. Now, if you read that report, what is your bias at the time? If you're a retail trader, what are you thinking? That
Long.
you said to go long,
Yeah.
all right? So as a contrarian, when I see this report, I know that the market actually wants to go short based off of this, and that the banks are actually on the short side. And typically, it started. So what happens is banks open up certain positions and they leave them open. They're always hedging. So if you can ever look at their balance sheet, they're taking a massive loss in one area, and while they're gaining in another. but they over time be able to shift those dynamics to where they're always hedging. One of the guys that I came under, I didn't really appreciate how his teaching style was, so I really got turned off from trading options. So I came and tried to learn from him. But he did say that he does. They say I don't care what the market does. We it doesn't matter. We are always hedging. So he had a great hedge system. I tried to learn it from him. He just didn't really want to teach it. It's just a terrible experience. But I started to understand. It's like every trade they take on, they always hedge. It's either of course people got different type of iron condors and all the other stuff. But I never stayed along with him long enough to get deep into it. But I always knew they always hedged, so it did not matter what the market was doing. It was very profitable. It's crazy. Crazy is the thing I was saying, right?
Right.
So when I look at this, like I said, 71% are long. Well, the question is that the 71% are correct. How do they get paid? That's too many people. So I always use the analogy of if all of us, 40 people on the call, if 40 people, if it was only 40 of us all played the lottery, and if 71% of us win, how will we all get paid out? Like where
Mhm.
yeah. So but let's reverse this. Let's say only 1%, which is really one person. Let's say one person win out of the 41 participants. Another person just jumped on. 41 people were on this call. If only one win, where does the money come from? From the 40 that lost. So the majority always finances the minority. We're in a zero sum game. All of the financial markets run like that. Right? We need a majority to lose in order to pay out the minority. Because if everybody is correct and going in the same direction, the question is where is the liquidity? How are we going to get paid out? So we need somebody to either believe if an asset is going to continue going or whatever. Because if I'm selling, you have to have somebody else there that believes that the price is going to go higher so that you can buy. But then we have a dynamic that kicks in called supply and demand. If the supply becomes too much off our selling, if everyone is trying to sell and the demand is not there and nobody really wants to buy, the price has to continue to drop until it finds equilibrium, which is the sideways movement that we find in the markets that we either call supply and demand, which is nothing but an accumulation zone, and it's an agreement upon traders that I agree that this is a fair price. Anytime an asset continues to drop, anytime an asset continues to go up without taking periods of consolidation, it means is that we have an imbalance and that there's no agreement. Meaning that if things just keep skyrocketing, look, I, the whoever is buying, they don't think that this is a fair price to sell. That's why it's going up. You so then what happens? It hits a top area and then starts moving sideways, and sometimes these called what? Flag patterns. Okay. Pennants.
Mhm.
That's a distribution zone. Okay. That means that now that is a fair value. Okay.
Gotcha.
That's how this whole entire thing works. And the more we understand as a retail, the better, right? So I'm gonna go on to the
Right.
chart of the WTI. And let me delete this off annotation.
Just
Please.
want to say this is very easy to follow. You're doing a great job. So please,
Thank
please,
you.
please keep it up. Hmm.
So let's go over and let's find our June 7th. And let's see, June 14th, 9, 8. All right, here goes 7 right here. Okay. Now, and I want to say June, let me see what June 7th fell on. What date? Tuesday. Okay. And then Wednesday, should be the 8th. All right, 9th. All right. Okay, so let's look at this block size right here. Okay, so remember, 71% were long. Okay. And what you notice is after they got everybody into one direction, look at the massive drop. These guys were trapped based off of that, of too many or too long. So if 71% are long, where are their stop losses? All back down up in here, right? That's collected for
Right.
premium. And so what the smart money does is they open up sell positions that they're not going to close. And once the sell position is opened up, remember, you got to have an imbalance. In order, guys, remember this, in order for a price to move out of a zone, it has to be an imbalance. You cannot move anything without an imbalance. So if we're up top, which we call this supply, only way price can break out is that there is too much of a heavy selling pressure. So who can only cause that? Smart money. So what do? They hit the button of a massive sell. Okay. Price gets here. Let me do this over. Price gets there, and this is what they're gonna do. They're gonna buy, but they're only gonna buy a temporary order. This is temporary buy, and then they're gonna sell here. The question is, why are they selling here? It's because us, retail, are emotional. We see something rallying and we decide we want to get in. So remember, in order for smart money to get out of a position, they have to have somebody who's buying if they're selling. But who is buying right here? Retail is buying. Even up moving up, retail are buying. All right. And as they go up, they're selling. Even this little red counter right here on a daily, they're selling. But this right here is designed. This is where institutions make their money. People think that they make their money on this massive drop. That is not what they're doing. This drop is designed to create the traps that they need, or better word is to create the liquidity. This is where the liquidity is created. Okay? Drop, temporary buy, sell. What happens? Come back down, came to this area. What's going to happen again? You have it what? Buy, sell, buy, and the process continues on and on a downtrend. But guess what? The whole entire time, that initial sell order is still in play. It hadn't been closed yet. Okay, so when you look on the screen somewhere, you will start to see this dynamic. Let me see if I can pull this up in the Forex group that we have. You can see actual picture of this. Where did I have it? Where did I have it? Where did I have it? Maybe I did not post it in here. I can find it though. Bear with me. Hold on.
Take your time.
So I put it on this. Y'all can see my screen.
Yes.
Let me see if I can copy this and put it back on my other screen. And let me take this off. Let's see if this works. All right, that works.
While you're pulling that up, question for the very, I remember this. I remember this video. I did get to view this one.
Okay,
the diagram that you just showed where smart money makes its initial play, did it wait for that setup? That was the very first play of the entire trend when smart money got in. Is that what you're saying? Let me know if I need to reword that.
So repeat it one more time.
Hmm. When smart money got in at the high on the
Mhm.
diagram that you just typed out, the one before this one, was that their initial play?
Right. Yeah. So the initial, yeah, to basically get it started. Is that what you're saying?
Yep. Yes.
Right. Right. That's the begin of it. So the little, because we're on the daily candles, but you see it was a medium of exchange up at the top. So they're
Yes.
willing and dealing, and what they're getting ready to do is move the market in one direction. But if they need to sell something, um, that means they have to convince you to buy it. So the best way to do that is to do what? To create discounts in the market, but the discounts are designed to really continue dropping. Because think about it. If you saw Apple, I don't know, what's the use Amazon? They say you see Amazon's at $90, whatever. You're like, hey, that's a deal. I'm gonna buy that. And then all of a sudden you get in and then they go down to 85. You're like, well, dang, what happened? So you like, I'm still gonna buy it. And then all of a sudden you look up the thing at $35. And you don't look, and it's a whole entire downtrend of nothing but lower lows and lower highs. Well, a lower high is actually a trap of where retailers are coming in heavily at that moment. But the question is, why didn't they come in a little bit lower as that price was moving up? Where our minds are designed to continue to buy tops for some reason. There were more people who came in the market to buy sheep at an all-time high than there are today. If whatever reason you came in for sheep to buy back then, there, right now we should see record numbers of buy orders right now on that asset if it's down. But the way retailers work, they need proof, they need reassurance, I guess, and they love the color green. When we, as experienced investors, we love the color red, you know, for discount. So our lower lows and lower highs is that trap because you have a low, but then when it hits a lower high, remember that's a rally. All right. Right now, people are talking about, oh, Bitcoin is in a relief rally. Yeah, well, you better look left too, because we sure could be at some structure. That is just a what? Um, a lower low, a lower high. In fact, I would bring that up. We could actually
Yeah, let's
see
take a look
that.
at that.
And so you will see, let's see, BTC, USD. Yep. So we're in this box. So a lot of people look at this and they say, um, it depends. I haven't looked left yet, but that automatically say, "Oh, this is a demand zone." I don't know if it's a demand zone because you could have sit here and you could have said that this was a demand zone when clearly it wasn't. It turned into a supply zone, meaning that price dropped from this area right here. That's one of the mistakes a lot of retailers come in when they first learn about supply and demand. They automatically think because something is moving sideways that it's already, oh, it's going to go up. Like, no, we don't know what something is until it gives a confirmation. This is just
Right.
accumulation, meaning that buyers and sellers agree at this price. They're willing and dealing, buying and selling, buying and selling, buying and selling. This is a agreement. This right here, this down, or at least in this area right here, is not an agreement. This right here is not an agreement. There's an imbalance. Because if it was an agreement, it would move sideways. This is where the move is getting set up. And if you look on all the charts, we see this pattern over and over. This is market makers. This is institutions. This is big money. This is what they're doing. Okay. What happened? Same thing. There was no agreement for 3 days. 1, 2, 3, 4, maybe 5, 6 days. No agreement.
Mhm.
Now we're in an agreement, meaning that there's some equilibrium. Somebody is an equal number of buyers and sellers. Remember, you can only leave a zone when there's an imbalance. But who causes the imbalances? Whales, institution, banks, smart money, whatever you want to call them. They can hit a button that creates too much of a pressure, but they don't want to do that all the time because they don't make money off of spikes. They make money off of accumulating zone. They're we call it accumulation, but it's really a zone of distribution. That makes more sense. Distribution. So they're making their money right here. This is where all the money they're making because you agree to buy at this, and they do what? They stay here for days. Is because they're too big. They can't get all the orders filled on one candle, so they stay here for 1, 2, 3, 4, 5. Let me just put the measurement thing on there so you can see measurement. So from here all the way over, 33 days. 33 days of selling. Okay? 33 days of selling. So then what happens? The sell orders are still, they hit another one. Now we're in distribution. 28 days. We've been in this range for 28 days. They're making their money. So people will say that, well, this doesn't make sense. Why didn't they just sell everything up there? That's the problem. They're too big. They cannot sell everything. People think that there's just a magical number of supply available in the market for them to buy. I heard one person say, if it's like a couple million Bitcoins left, why can't somebody just come in and just buy all the available Bitcoin? Because remember, there's a lot of Bitcoin that's lost. There's a lot of Bitcoin that's locked away in wallets. There's a lot of retailers who just holding on to their Bitcoin. It's a lot of things to consider. The problem is that there's not enough. So if there's not a supply, what's the best thing to do? Force the markets to levels to where someone will get uncomfortable and want to sell because they feel like they're now losing and they will want to go ahead and secure some profit. So that's the best thing they want to do. So when this drop happens, all this means is that it's not Bitcoin is bad. It means that the dollar is strong. People want to go to safe haven. They want to go into the dollar. That's all this means. Everybody want to go into the dollar to save. But the smart money says that, hell, we want to get out of the dollar and we want to get into an asset. It's because they know in a rebound effect, the Bitcoin will perform way better than the US dollar in the long run. And so the impatient gets out. So what happened? Smart money sells up here, dumb money sells down here. Dumb money buys up here, smart money buys down here. We always still have to ask ourselves if somebody is buying, who is selling? And if somebody is selling, who is buying, right? So we see this dynamic. And you look on this chart, here we got another zone. Willing and dealing. Most people look at this and say, oh, this is going to be this is just a demand zone. We don't know if it's a demand zone. It's only going to be a demand zone until what? An imbalance. What happened? We had an imbalance of what? Buy orders. But who creates the imbalance? The institutions. They know that just because they created this doesn't mean that they get the profit off of all of this because they're too large. But they do make profit in increments all over. But here's the thing. This is where their profits are made. It's not here. It's here. See this move sideways? Profit is now made there. Profit is made here. Imbalance, will and deal. We see this dynamic over and over and over again. So what we can do with KOTs, with sentiment trading or whatnot, and I'll pull this up and use daily FX for sentiment trading. We use this, of course, the markets are closed, so it may not show everything. let's see if it'll show us. It might be okay. It still show us. All right, so let's look at the Euro USD. It says bullish. The net long was 69. Last week it was 74. 74% were long. Now watch this. Let's go look at the Euro USD, and this is what you're gonna
Okay.
notice. Look at this from here on down. 665 pips drop. 74% were long. Why are we dropping? We take a contrarian view and we say, wait, if 74% are long, that means that the institutions are really on the other side. That means they got liquidity. If 74, so y'all are here. So since you're here and you want to buy, we're going to sell to you. But because our sell order is so large, it's going to drop the market. But we're gonna get as many of you to buy our orders as possible. But we know that y'all are not large enough to take the whole thing. Okay. Now, when it moves sideways, that is what we call the equilibrium, meaning that the bulls and the bears are agreeing. It's 1-to-1 exchanges. That's why it normally stays within a tight range. So it's a little bit equal. That's not going to be equal to the T, but it's going to be, you know, balanced. And this is what a balance will look like. Balance will look something like this right here. USD, Swiss franc. 55% long, 45% net short. That's what a range will look like. Okay. It's not one that's outrageous, all right, or the other. Okay. Um, what's another outrageous one on here? Okay, Euro. So this is at 70%. So let's go over there and look at that one. Euro CHF franc. You see, we don't even. I don't even have to say anything. And what I was saying is, I feel like a lot of self sabotage is kicking in because I do this all the time and I show it, and I'm just showing how much money could be made, what's doing, and it seems like people look at this and be like, oh, I don't care. I'm still gonna do what I want to do. I'm like, at this point, like guys, like we keep seeing the same thing over and over. If 70% are long, why do we see a massive continued drop? So guess what we're looking for now? Eventually, all right, what we at? Right here, 70. So 70% along. Eventually, we want to see this number over here increase. We want the shorts to get to gain so that we can now look to go long. So what you're gonna learn is that retail is actually correct, but just not right now.
They got in early. Exactly.
Yep. And
to answer your question, why did they go ahead and get in? Because they got in at what they thought was a discount. Someone said in the chat, how often do the reports come out? And I want to also add, for like the ES and NQ traders, what is the equivalent to this type of data?
Gotcha. So this one comes out weekly.
Okay. Thank you.
All right. So you see on the chart. So the last one was July 12th. What day that fell on? The Tuesday. So I guess it's every Tuesday this report comes out. So it shows 69% were long. So let's see on here, and I'm gonna put the link to this in the chat too. And when I'm recording this, so I will actually post all of this as well too. Let's see. So here's the Nasdaq 100. So that's on here.
Okay.
And I'm gonna send a link for everyone to join the Telegram group. So this guy, He does all this stuff for free. All right, so
Thank
it's
you.
really it's really great. It's really good. Um, and I just found him recently because typically you have to go to the commitments report on a national site to get it, and this is what it looks like on there. His break. See, this I don't like that. You know what I'm saying? But the way he make his colorful looks good, and you can see things. This is a little bit odd, but this is how it looks on the actual site. So he breaks it down. He does some great work with making it color coded like this, which is real good. So what was this? The Nasdaq 100. So 76% 972. Now let's check this out. Let's so you never really want to just look at this and just think that let me just go ahead and jump short. Use your technicals, right? Use um we want confluence, right?
Right, right,
Um, and we want to make sure a lot of things line up instead of just going off of one thing. Okay, because
right.
you could it could be correct, but you also be caught in a trend or maybe some news hit that we wasn't really prepared for that could have changed the dynamics. So that can
Right.
happen. Nah, do y'all use this Nas 100? Because I don't really trade it. I don't even know
No,
which one.
sir, I don't.
Okay, let me see. This one might be decent. Okay, I did chart this one. All right, so what day was this? I was doing this. All right, so now this is funny. Now watch this. So let's look at December of 2021. I didn't mean to do that. Eraser. Here's my drawing thing. All right, where you at, December? I'm messing all up on this. Let me see this.
You're good. Take your time. You're good.
I'm trying to use these
If
things I
everybody's
don't
in here
use.
is grateful for all of the gems being dropped because this is definitely new to me. So I appreciate you.
You welcome. I'm gonna just highlight like this. I won't let it do it. All right, you see my cursor here. It says December 21st, 2021. All right, we got
Yes.
71,976 were long. Okay, and if you look through, uh, basically you see, for the most part, the longs are really dominating. Okay. And we're going to look at this February one and we're going to look at, let's see if another one, okay, and maybe this April ones. We're going to see what it looks like when the shorts are dominant and what it look like when
Okay.
the longs are
Perfect.
dominant. So December, we do know that the longs were dominant. Now, on this chart, where this red arrow is, that's December. That's December of 2021. And what do you notice? A continuous drop. So when we
Drop.
would have looked at this report, we would have been saying to ourselves, we're looking for a sales setup. Okay. And so on a sales setup, we will come to the chart and we will chart it accordingly and we'll wait. So let's do a replay. And we draw a little box here. And we're going to patiently wait for price to break and close out of this area. Now, where would be targets to the downside? Areas that was once demand zones, key areas. And if you're not comfortable with this, we use some Fibonacci retracement levels to help with the zones, which I prefer. And I'm gonna bring that up for you so you can see. And I'm gonna go on a bigger screen. Take all this off. And we're gonna do this. All right, I'm gonna take this from that extreme low we had in March. And we're gonna take it all the way up to the extreme high. And 23% is a level, 38% is a level, of course, the 50, and then the 61. All right, so these are all levels that we'll look to. If I was trading, this is the key levels I'm looking to take the trade to. Sorry, let me move this over so you can see it. And in my trading strategy, really, I typically would take this trade based off it really breaking the 23%. But because I know now about the KOT reports and all that other stuff, I could play it a little bit different. Regardless, what I'm doing is I'm looking for the clear trend, and we want to look for retest to come back in structure before getting in trade. So I'm gonna play it. I'm gonna try to slow it down, and I'm gonna play. Oh, and let me take these off, so we're gonna have a clean chart. So this is how we'll look. So we got our levels, and I'm gonna go ahead and take this off. And hit play. So you see up here it's gonna be moving. I slowed it down so I can do it, so you can see it better. All right. So let me pause. Where we at? Pause. Pause. All right, so you see we broke, and then we came back up here, and we had a retest back here, back into this zone. Okay,
Right.
all right. So based off that retest, okay, we typically try to wait for a candle to eliminate the candle that came, all the candles that came in. We want to look for a candle to eliminate this red one, eliminated. Now we're looking to take this thing short because it came back in up into this area, which, remember, the breakout. You get the breakout signals that, oh, all right, this may be a supply zone. But what we want to do is we want to let price come back in to the supply zone for a retest before we determine to go short. Now, where will our stop loss go? It'll go above the structure. If you look left, you can go up here, but we want to go above the structure and here. Now, this is what I was telling people when you start trading. If you take this trade, you need to say, well, shoot, if my stop loss is hit, what is that going to look like? If it's too massive and big, you got to reduce your position size down where it makes sense. Now, if it's too large for whatever reason, then you need to adjust your stop loss and say, hey, I want to fall out of the what? The bottom level window. When I say bottom level window, it's literally equivalent to if you stepped out your window right now, you can step out and put your foot on the ground and you can walk away. That's the type of fall. So if you fell out of that, we good. We do not want to fall on a 40th floor. That's the problem. So when your stop losses, think of that. What floor am I on? So up here, you at the 40th. But I can deal with the 40th if there's maybe a trampoline or a bouncy house down at the bottom or something. I might do that. But even then, I don't like heights. So you got to be careful, right? So that's how you want to think about it. So if we're gonna fall, what safety looks like, okay? So look, we're in. Our first target is hit, right? We like to trade structure to structure. You don't want to hold two level. Now, we have a rule in the 23%. Once the 23% is violated, which it was, there's a higher probability that it's going to come to the 61%, which is right in here. Now, I don't have the numbers on the probabilities because I'm still really truly back testing my strategy, but it's been very, very good. It's just basically I call it the 23% retracement strategy. All right. It gives me a clue. All right. Now, typically, whenever the 23% is violated, price comes back above. Okay. So we're going to be looking for price to come back above, and we're going to look for price to come back into this area to retest. Okay. Now, I'm going to give you a little snippet of what we could do as well, too. We can do a fib within a fib. So what does that mean? I can come up here and take my fib levels, take it from right here, drag it down to right there, and then I can play these levels and I can go long. So what did I say? Typically, when the 23% is violated, we got a higher probability that we can come back up to the 6-1. Does that mean it's going to happen all the time? No. Right? Nothing. If we knew everything was going to happen all the time, we'd all be billionaires right now, right? All right. So I got that, and this stuff going to look a little muddy, but once again, over time, I got you. You'll get it. All right, and I'm gonna go ahead and take this off since we already knew that level was hit. All right, so I'll be looking to see if we can get back into this area. So let's play. Targets hit. We're out of the trade. We came back because we said what? It's a high probability. Now, what else did I tell you? Typically, when a 23% is violated, price does what? Come back above. I mean back below the 23%. See this right here? 23% came above. What happened? Came back below. This is why I haven't released the strategy fully, is because I'm trying to figure out where is the relationship of why does it come back and where is it landing. But what I'm noticing is anytime this thing is crossed, for some reason, feel like it needs to come back below it. So once I figure out what levels, what is really happening in here, that is the final piece. But I do know that majority of the time, when it crosses that 23%, we're going to the 61 at minimum, right? And this happened. So guess what? Because of that strategy, you're in the trade, your strategy hit, you're good to go. But you're also playing in the strengths of the who? The bank. Why? Because you know the bank can only create wicks on the chart. And the wicks leave clues. We got one right here. All this selling, all this buying pressure comes in, and then what happened? It sells and it covers it. The bank created that. The bank created this. So we don't want to. When you look at the chart, you just want to look at the bank. The bank is just painting this picture. It's telling you it's leaving footprints. It's leaving this mark. So what we're doing is we're following the bank. Okay, we got this, and then boom. Now at this point, I don't really care what it does because my targets are here, right? So I'm good. But what I will do is I will look left, and I see this rejection candle once again. Who creates wicks? Something big came in to reject it. You look left, we're back at market structure. This is the confluence we were talking about. We're back at structure. You look left, we got wicks, we got all those things. It went up to the fib level. That's multiple things. We got a nice what? Low. Right here we go. Low. And I'll draw it for you. Low, higher low, lower low, higher low. What could we possibly expect next? Possibly go lower. Now, can we range? Possibly could. Somebody could look at it and say, man, it look like a flat pattern. If you look at it, could we come back in here? Possibility. Now, with that being said, because of that, I stay out. Because what I just did, I was like, I don't want to get caught on that. I'd rather see some other key levels violated before I even get back in the trade. So on this one, I would be 2 for 2. I took 2 trades. I'm good. Okay. I don't want to over trade. So we let it play out and see what we got coming up. All right. Our third target is hit, which would be, I want to say this was the 38%. Was there a 38% retracement level? Once again, you got a big wick come back in, but look left. So this will happen to a lot of traders. They come in, they get in, oh, we're going long. We're going to maybe go back up here. But you've got look left. Like, that's a lot of traffic right there. So all of this It's a supply zone now. So you have to be careful. So if we are going to take this trade, you get out back here. Why? Because there was a lot of sell pressure in here. Now, it was a demand zone at one point, but then it got violated and became a supply. And all these are nothing but retests. All right. Now let's break. So remember, I'm out of this trade. I'm not even in it. Move this out the way. So let me pause and let's see what day we on. Uh, Move this out the way. What day is this? Okay, April 5th. So let's go back to our KOT report. And let's see what April the 5th looks like. April. All right, April 5th. All right. So 68%. I'm sorry, 67,000 was short. And only 58,000 were long. So let's see what happens over here. Was this the okay, it's the 22nd. 13, 8, 7, 6, 5th. Fourth, fifth. So let's look at something. And we got April 7th short. And the March 160. So look at the March 29th. Let's see where we can see something. All right. And this is a unique one because one is showing exhaustion. Move some of this out the way. I can't get my stuff. Here we go. All right, for the 29th, it's right there on that candle. If you look on a report right here, I'll annotate for you. Right here, March 29th. %49 were long and 60 more were short. But when you look at the chart, we're still, this is daily. So y'all know this NAS 100 be moving fast. So we had 2 consecutive basically days or weeks, whatever, of bullish pressure coming up, which majority were it was short. So if majority was short, we're going up though. So this would be a better. Let's do this. So let's do based off of the amount of days in a week instead of based off of one day. So we're gonna do March 29th to April 5th. That's what we want to see. So this is the 29th. 1, 2, 3, 4, 5. So remember what we said when prices, not prices, but the long and short orders are not that out of balance, it's going to move sideways. And exactly what we got right here. Because when you look at this is, I mean, it's okay, but it's not, it's not terribly that bad. I mean, 60,000 was going to go short and only 49,000 were long. So you see more of a sideways, all right, moving. Now, what if we broke that down on a lower time frame? I'm just on a daily, so it's a little different. So we're going to lower time frame. Let me take this off. Annotation clear. Clear all drawn. There we go. But you see it better in this box too. You see the dynamics now. Now you can play this better with structure in here. And so what day was it? March 29th. And it said, all right, March 29th started right here. Now y'all get to see it. Here we go. Now watch this. We knew it was more what? More sellers. Right here. Right here is March 29th. It started. There were what? More sellers than longs, more shorts than longs. We grew 2%. And y'all know y'all use leverage, y'all use ticks, whatever over miles 100. So that's a lot. So you were able, if you're going down a lower time frame, now we're able to see it a lot better. Now I'm on a daily school, we can't see things as clearly. We can get the overall trend, but now we go down here, we see all the peaks and the valleys. So if once again 60% is short, but then only what was it? Not 60%, I'm sorry, but 60,000 were where we at right here. 60,246 were short, and only 49,019 orders were long, but yet the longs won, and the shorts are going to fund the longs. So the majority would fund these guys. Okay. And let's find where April 5th falls. Now, here's the thing. Now the shorts are starting to take command. Okay. So then what happens? The institutions created what? A buy order to trap who? The longs.
Okay.
The longs come in, gotcha. Because they have facilitated their massive sale order that they never closed. This one's still open. This sale is still open. But here they come to the rescue. We're gonna buy. Let's get them in. We got them. What does this look like? Look like a little flag pattern or something, right? If you look just glancing at it, hey, this thing look like it's gonna go higher. You know, we looking like, hey, this at least with this one, it's a little flag. Like we're going higher, we're going higher. Now we do from here, we do, but now they got us, and now they're gonna take it down. And every spike is them setting up to get who? The retails to get in. Spike them, sell to them. Spike them, sell to them. Spike them, sell to them, and it goes down over and over and over and over again, right? And if we look at this, like I said, all the way from December all the way up to this now, we've just been in a perpetual downtrend, but the majority of the time, the loans were the ones that were so-called winning. Hold on, y'all. Let me take something off the grill. Hold on. I'm bad. Sorry about that.
You're good. You're good. A lot of good information here. Thank you so much. There was a couple of questions in the chat. Somebody said, "Can you find the same information on bar chart?" And another person asked if you could look up USDJ something. I don't know how much time you have, but
I got time.
that is what they USDJPY. And then, can you find the same information on barchart.com?
I'm not sure about bar chart, so I don't. Yeah, I wouldn't know, but the KOT slash reports will be able to give it. Let's look. I hadn't looked on the forex one on here. Let me see. I did see it. Silver. Let me go back. Now on daily FX, you do have the USD JPY. All right. So 75% was short as of last week, and 25% were long. So if we go to JPY USD, and what we said was 75% was short. So look what happened. If 75% short, which clearly look like we're doing a bull flag that's, I said a bear flag is forming. But look at this growth. Wait, something's wrong with my measurement. It should be like that. Let's see. All right, so you see this growth right here. My measurement tool is off. It should be showing bigger pips than that. I don't know what's wrong with it. But anyway, you clearly see that we're in a uptrend. Well, not an uptrend, but at least a rally, which we all know that this looks like a bull flag. A bear flag. Get your flagpole. And we got like a little flag pattern that's shaping up. But like we said, if 75% are short, then why are we rallying? So this gives you the advantage. Because all flag patterns they're nothing but traps. So a bull flag is a bear trap, and a bear flag is a bull trap. So what it's looking like, it's like, oh, we're going up, we're good. Well, if you don't know about market patterns or chart patterns, candlestick patterns, then this can sort of trick you in thinking that, hey, we're going on up, but in reality, we could be looking going down. So we do believe that with 75%, short, eventually that's going to be able, to change. Okay. On this. And we have to be mindful. This may not be a bear flag. It may be the trend is starting to. That's it. We're about to move on up and going up to the upside, based off of this.
Another question in the chat. They said they appreciate this. So you look at these reports and use the approach for the whole week, in addition to your own analysis, or just for the first few days of the week?
Yeah, I look at it for the week, and then I get an overall trend. So I go back and look at past data. I like to start on a daily to get a bigger look. I don't know why my the values over here are off. I don't know. Let me see if I can reset my chart. Something's off. Those values are not supposed to be there like that. Let's see if this does something. All right, this looks better. All right, let's look at this is a US dollar, Canadian dollar. Let me take all this off. And I was able to trade this one successfully this week. Let's go on a daily. And let's go back in time. Let's look. U.S. dollar, Canadian. All right, so it was 56% were long and 44 short. So, and this will tell you what it is too. So it has daily, and then it show weekly. So for typically for the week, it's going to appear to change. But if you look at this right quick, if I click, see how it changes. It'll tell you.
Oh yeah,
Yeah.
that's helpful. Yeah.
Mm-hmm. So it'll do that. But we clearly see, as far as the daily, we saw that it was more people that were. It was 56% were long, but 44 short. But if you look what happened on that whole entire day, we had selling pressure, and we had a what wick here. So this right here, somebody asked me that. I told them I want to get a $30,000 day. I mean month. Um, in trading, right? Well, these are the things that help set that up because now you know what to look for. Remember, we say that when a wick is rejected like that, we know what something had to come in that's big. They're the only ones. So, could this be the start of massive selling pressure? Okay. And could this be a huge bear flag that's forming to get us lower? Now, here's what we have to think about. The US dollar, which we look at the dollar index, it's really over uh, extended severely. When the dollar is too expensive, it really makes the exports business for other nations. Um, I mean, imports. If they got to pay for anything in the American dollar, it's too much for them, and this hurts poorer countries. This dollar needs to come down in value, big time, or the world economy is going to suffer if it keeps growing like this. If you notice, our so-called greatest, prosperity, whatever you want to call it, um, if you look at this range, this is decent, right? This is a decent price range, $83 over here, 2012, stuff like this. But look what's happening. This growth for going up here. This is a bad sign. We can always go. We can go back until 2008 when we had that crisis, and look what happened. Why? The dollar is a safe haven. So when this crisis happened, you everybody know what happened in 2008. You know, it was crazy, right? But after that, look at this drop. This is what we need. We gotta have this drop. Okay. And what do you notice? You notice that we have not had a major correction yet. It is due for one. If it is, your Bitcoins, your other currencies, other things, they're going to skyrocket because people are leaving the dollar and they're going back into risk. So this is called risk on. So risk on, right now we're in risk off. So when you're in a risk off environment, the dollar is going to be strong. People are coming to safety. I don't trust the economy. I want to go into my dollar. So that's why I tell people, when you look at Bitcoin's chart or any chart that has to do with currencies, it has nothing to do that Bitcoin is bad. Fundamentally, Bitcoin is Bitcoin. It don't even have a CEO. So like, what you talking about? You can't read a report that says, well, we have profit this quarter and not. It don't work like that. But what you do have is that it's based off of the sentiment, the prevailing sentiment and temperament of the economy of people. So if people feel like they're ready to take on risk, they go into a risky asset such as Bitcoin. And when things get a little shaky, they go back to the safe haven, which is the dollar. And so over time, I'll be able to show you that anytime we had massive things that happen in the economy, the Japanese yen, the Swiss franc, and the dollar are safe havens. Okay, most people say It's gold. These are better safe havens than even gold. All right. Remember 2020? So, and this doesn't look like much, but you can see right here in March of 2020, you see you got this drop. Well, what's on the right side? We're on the euro Japanese yen. It's the yen. So the yen was a safe haven for this. And watch this. We can look at all the Japanese yen pairs, and you will start seeing that particular drop. See this? What does this mean? That meant that the yen was strong. You can't look and say, "Oh, the Canadian dollar is losing." It's not losing. It's just people are converting. So the smart money did what? Hey, sell the CAD, buy the yen. All right. Once they got what they needed, then they can get off of it because they only use it for a safe haven. What's another one? Maybe look at the British pound. British pound is a little strong, so it might not show too much a difference during that period of time. Let's see. Is this it? Yep. So it did. So I already had it highlighted because I did this before. But you see this whole drop because of what? Safe haven. So Forex is a beautiful thing that you can understand, and you're like, wait a minute, when we're in economic troubles, I can make money. I know the safe havens. The dollar is going to be strong, the Japanese yen is going to be strong, and you can pair those up with weaker currencies. When something goes wrong in the economy, and nobody running into the euro, the Mexican pesos, and all that. No, they're going to run into either of these three. Look at the U.S. dollar, Canadian dollar. At the time, you go back to March, you'll notice the same thing. Where are we at? It's 2020, January. Look at this. This was the trade where I was looking for my big $30,000 payout by taking three standard lot sizes because I saw a gap right here and I knew that price had to come in and cover it, but I got distracted. It's another story. But look at this. February 2020 through March, all of that impressive growth. Over 1,488 pips made. Because why? People got out of the Canadian dollar and it came into the US dollar and it pressed it up. And of course, after that, selling pressure comes in. And from this supply zone all the way down, we look to enter the trade from right there. That was over 1,112 pips. And we was looking to do $30 per pip. And you do the math, it's almost over 30 something $1,000 based off of that. But got distracted. That's self sabotage. We already had it drawn up. I even got a YouTube video out saying it, showing, yeah, we're gonna take this trade. And my crazy behind didn't even take the trade because I'm focused on everything else. Why? Remember, this is a pandemic. So we talking about coronavirus, everybody going crazy, the whole economy gonna fall apart. Like I'm up here like, man, telling my wife, no, pull out $2,000. They in the banks. Like we all just fell, you know, victim to all of that, right? So there was not a lot of investing during that time, which it should have been. Looking back in hindsight, there was a lot of opportunities that was there, right? So I missed it. Lesson learned. It is what it is. But you will learn that. That's in Forex. You do all that stuff. I do teach this stuff in our Forex group. I do got a workshop coming up next Wednesday, just talking about how to trade like the big banks, and like some of this stuff will be in here, and it's only a one-time fee for the workshop, but it's also ongoing in the Telegram group, and I'm trying to get people to get up to speed. Working with them. People can ask questions. Larry's in here too with me too, so we do it. So this is the Telegram Dark Horse Forex group that we in, and you can see right here I'm giving them an example on one of the small accounts. All right. So now I'm gonna. unpause it. I was talking on it, but yeah, I was screen recording, just showing them a trade, a buy setup based off of a chart that we were looking at, and right now they're really trying to learn only right market structure. I haven't even talked about no KOT, none of that. So that's how new a lot of them are. So this what we're talking about today is more advanced because a lot of you guys are a little bit more up to speed with trading um, than they are.
Right.
So yeah,
Excellent, excellent information. I don't see any other questions in the chat. How can people find out about your workshop on Wednesday? Can you put that in
yeah,
either the chat here or the main Telegram group.com?
yeah. I can post it in both. Um,
Okay.
and it's the website with Dark
And
Horse.
then,
You can go to the
okay,
workshops,
so there it is. Mhm.
and I dropped the promo code in there for you guys. So it's $75, but promo y'all get it for 50. It's only one time, and like I said, you'll be added into. There's no other additional fees or anything. And I do a lot of live Zooms, live trading, all that comes with it. You can ask questions, so you can register here. And
Very
I
nice.
hate what to do,
Y'all
but
be sure to check out darkhorsecoins.com and go ahead and register for that class. Please add that promo code for all the group too. That's
yeah,
nice.
it'll be DHC 2022, but I'll put it in the chat, in
Very
the
good.
Telegram. In fact, I'm add all this stuff in here now. So let me put this in. Copy.
Yeah, someone said they're definitely going to start keeping an eye on the reports. I felt the same way. I think that
Mhm.
any edge that we can get is going to be beneficial. I
Right.
really, really appreciate that. You guys got the link. Make sure you click on that. Sounds like we're kind of coming to a close of the Zoom meeting, and the promo code is there too. It's nice.
And then I'm gonna put the KOT, go back up here, so you'll get this, and you can click right here, and you can go over major currency pairs. So somebody was asking earlier, can you do other ones? So you got exotic currencies, majors, and then you got stock indexes, cryptocurrencies, and metals in here. But you're not gonna have every crypto. It's gonna be the big main two, which is gonna be Bitcoin and Ethereum for the most part. Let's see. Yep, on this report. But you can go up here to the majors for the other currencies. And, they should have. So you got the Swiss, New Zealand, Japanese yen. Somebody asked about that as well too. And the good thing is that this is not based off of um, a currency pair. So it's just the currency itself. So that'll let you know how many are short in the Japanese yen or whatnot. Um, So I'm gonna have to play around with this one to see how this works with an individual currency because it's not actually pitted against it. But once I do another analysis and look at it strong enough, I'll be able to see like, oh, okay, so this is how this is flow. But like right here, I do see that it says 95%. I mean, I'm sorry, 95,000 are short as of the 12th and 35. So I'm just gonna glance over here to USD right quick and see JPY. It says, bring this over. Take all these. All right, what it said again? Once again, what do we say? If 95,000 were short, why are we in an uptrend? Yep. So this report really help you get on the right side of the trend. So the right side
Right.
of the trend is going to be the opposite. If whatever everybody else think, that is not what the institution is going to go. But eventually they're right. So when people say, "Man, Bitcoin is going to go to 100,000," yeah, you're probably right, but not right now. So the prevailing sentiment of the retailers, they are correct. They just have a different time horizon. Yeah, you know you don't. It's not going to play out like you think right now. We see it all the time. We talk about real estate prices. We've all said in our circles, man, watch gas gonna go up. Before gas really went up, we all said it. We all knew it was gonna happen. It just wasn't gonna be right there. So trust yourself. You do have the intuition. You do see things that are transpiring and happening in the future. You would just learn as you get more into yourself. You're like, it's not on my time though. So once we get that, it's not because somebody has to control this market, and it's the people who have the bigger money and capital. We don't, but we can see it for what it is. So we will do everything that they do, and that's what I try to teach about how to really mimic, well, not mimic, just follow the banks, follow right behind them. We they leave trails, we clues, we're right there. And the way this is designed, you almost really don't want the whole world to really know about all this because then it'll mess everything up. Now we'll start to reveal to you that big banks are starting to catch on. So they knowing that too many people are understanding. So you're gonna see a lot of what we call wicks, wicking out, knocking people out of trades, stuff like that. That's a tactic used to shake. They got to shake you. And how do they do that? They use robust bots, trading algorithms. And I will end it with this, and you will see what I'm talking about. Most trading um, in the stock market is not done by humans; it's done by algos. Find that article so y'all can see. Let's see if it's in here. There's a percentage I was looking for. Might be another article I found. Let me see. Let me see this. Hold on. I don't know. Where's it at? Where's it at?
Another great question in the chat while you are pulling up the final thought of the bots, algos. Uh, how large of a difference do you like to see the numbers for high probability trades on the COT reports?
So,
Is it more than like the 45, 55? Are you looking for more like a 70, 70,000, 25 difference, 25,000 difference? That's a great question. I was actually wondering that myself.
to determine which one um,
is more. Oh yeah, to determine for like the longs versus the short. Say if you see like 70,000% long and 30,
right,
1,000% short, you would obviously be on the 30% side.
right.
How large of a difference would you like to see it?
Well, when it's definitely if it's 70% or above, like that's extreme. Um, so some of you may use your overbought, oversold indicators. So you can use that in conjunction with that. So you can see if it's too much of a string with that. But anything that's like, for instance, let's go back and look. Like this 56% is pretty good. So I like to be, if anything is 6% over or whatever, the 50%, I like to go with. Like this is a good one too. So 61%, 39. Now they do give a signal. I don't really pay too much of that. They'll tell you, oh, it's bearish. Um, but see, you see, sometimes it throw you off. It says bearish here, but then it says 64% is short. Sometimes you may get that, but I don't really look at the signals like that. But what I did notice is this: if it's mixed, if you see mixed,
Mm-hmm. Mm-hmm.
typically you go with whatever's the dominant. So you go with the 61%. So we'll look at U.S. oil to see how that will how will, how that actually look. U.S. oil, crude, and it was on the daily. All right, and it says 61% were long, and it's mixed. So you go with the majority, and it was. So you see this, we had a little rejection at the end of the day, but it started out bullish. So the Bulls are winning. Well, for the last 2 days at least, they are winning based off of that. So if we do see a mixed signal for daily FX, did I put this one in the chart? Daily FX. Let me see. I didn't. So let me add this in. And you can sign up to take a. They got like a little mini. I guess not really a course, but it breaks down a report of how to look at it and read it, so you can view the. I'm here. Yeah, here it is. You get a guide, so it's a free trading guide, and they email it to you, so you can sign up uh, for that, and they help you understand about what it is to be a contrarian using this sentiment report based off of that. Let's see. Look at that, y'all. Come on now. Look at that. Think about that. This is this is this is what I'm going to try to get you prepared for and myself. Okay. This is what we're about to go against. 80% of the daily moves in the US stock market are machine led, which is algos, which means they are smarter than us. They're faster than us. The bull flags and bear flags are never on the double tops, the head and shoulders. Those things are going to eventually become something of the past. It's going to. You got to remember, when once you get educated and you get caught up to speed, there's something else to be learned. So we have to prepare ourselves as if we're really at war and we're studying the enemy of what they're doing. They're in the next evolution. We're behind. That's why you see a lot of what do you call it, multi-level marketing companies doing. Let me get you this trade bot. Learn this bot, trade this algo and all that. Well, the problem is the big boys who got billions of dollars got patents. Did y'all didn't know this, but did y'all know that the stock market crashes every day? People don't know that, right?
No, sir, I didn't.
Because it's at a micro level. If they move so fast with the algos, you would never detect it. Micro.
Yeah, stay up to speed, y'all. Stay up to speed. Stay educated. Once
That's
you learn something, just consider that old information. Stay up to speed.
So the stock market has about 12 mini flash crashes a day, and we can't prevent them. A blink, about 300 milliseconds just pass, the same time required for a lightning bolt to travel 100,000 feet, a satellite to fly 2 miles, or a stock price to swing from $10 to 0.0001 and back. Now, if something can move that fast, do you listen? I say about 4 years ago, I was on a phone call. The lady said, "Hold on. Hey, I need you to go down to such and such price level. I got such and such a need to get filled. You're gonna see an order for such and such hundreds of thousands of units. All right, I got you." And then the person got back on the phone, was talking to me, and I'm like, "What?" I'm like, "Oh yeah, if a big person want to buy one of our stocks, we could fill them at the price point we want them to get filled at. They could let us know. They put their order in, and we go down and we collect it." I said, "Damn, it's this thing is the rabbit hole is deep. It's deep, and it's not designed for retail to really know all this. It's not. It's not something that we really want to go viral. We really don't, because you can learn how to play the game. You know it. Because what happens is the more you learn something from a game, it's the more they tweak it into their favor. The house always wins. So we always have to study about and say, wait a minute. We look on social media, we look everywhere. So financial literacy has become a buzzword. It's become popular. Everybody's doing it. And I sit here and I told people, I said, something's wrong. If too many people are coming to this table, man, something's about to happen with this market. I'm telling you, something's not feel right. Too many people getting smart. It don't make sense. And I've been taking a contrarian stance since. What are they preparing you for? Why are they why are they wanting you to have financial education? Who for what? Well, for one, remember, I believe it's over 10,000 baby boomers retire every day. 10,000. 10,000 baby boomers retire every day. Who's going to fund their retirement? We. We are. We have to buy from the stocks that they're going to sell to us. So, what better way is to get as many people up to speed on the stock market? They want to teach teens. They even lowered the price. I mean, the entry point, where now you can be younger and have a stock account. They want to educate kids because they need liquidity. We have to look at the game totally different now. And it's great. We want people to learn about stocks, crypto, and forex, and all kinds of things because there is opportunities there. But you can't be naive and you come in because then you'll be taken advantage of. And this is what this is about. We all know the casino is not designed for the most of the people to really benefit from. Only a few, which is the casino owners. But that's it. I don't want to keep y'all forever. But yeah, um,
For one, thank you from the bottom of my heart. I do appreciate you taking this time just away from your family. For just thank you, family. Thank you so much. Thank you, thank you, thank you. Very good information. I put the trading masterclass in the Telegram link.
All right.
So, and then the promo code is there as well. You guys will see that in the main Telegram group. Thank you so much, Eric.
You're welcome, and I appreciate y'all time. Thoroughly enjoyed you, and I thank you for moderating. You did a very good job.
Thank you. I enjoyed it myself. I hope you guys enjoy the rest of your Saturday. Thank you again, Eric. There's a lot of thanks in the chat for you as well.
Okay, thank y'all. Appreciate y'all.
I hope everybody has a great day.
You too.